Hello and welcome to another episode of Good Investing. I'm Rachel Grenn.
And this is Andrea Slick.
And Good Investing is a podcast all about how passive investors can transform their financial future through multifamily syndication.
Yeah, we're talking to busy professionals and entrepreneurs looking to build passive wealth and make money while they're sleeping. So if this sounds good to you, then you are in the right place.
You are definitely in the right place. Today we have Matthew Sutika from Obie Insurance on, and we get questions all the time from our passive investors asking, hey, what if the worst thing happens? What happens to the property? So Matt's going to be on answering all those types of questions for us.
Yeah, exactly. He goes into the nitty-gritty on what the coverage is on our multifamily assets, and you might even hear my crazy insurance story.
Yeah, it's wild. It's absolutely wild. So a little bit about Matt. Let's read his bio here real quick. So he's actually an award-winning entrepreneur and business owner in the insurance sector. Following a 5-year tenure as a top-ranked State Farm agent, Matt founded Skylight Insurance after catching the attention of the largest Century 21 franchise worldwide. Within 2 years, he grew Skylight Insurance to a over $5 million brokerage through unique partnerships and technology within the multifamily community. A staff of less than 5 and zero marketing budget. bridging tried and true insurance principles with tech, Skylight merged with Obie, an insurance and portfolio management platform for commercial real estate investors. Today, he serves as their chief insurance officer with a heavy focus on multifamily insurance. Matt, thank you so much for joining us on Good Investing. We're so happy to have you here today.
Yes, thank you. Very glad to be here.
Why don't you start off and just give us your story and a little bit of background about you?
Absolutely. I bet your audience is just waiting to hear about the insurance guy's background, right?
Literally.
I always try to promise as the insurance guy that any conversation I have, I will do 1% insurance, 99% fun. But no, so my background, I am an insurance nerd. I'm born and raised, insurance dad, 40-year State Farm agency. I opened one out of college, fell in love more with the entrepreneur side of insurance than the actual policy jacket or policies and things like that. Did that in Indianapolis for a while and then got an opportunity, which is more leading into what we'll talk about today, to build an insurance company for Century 21, which is a larger, I call it not personal lines, but personal home, real estate company that probably a lot of viewers have heard of. They have a very recognizable brand. So did that. And that really was my first step into combining entrepreneurship, insurance, and then now one of my favorite things, real estate. So started on the small side in the home, doing the insurance, finding ways to help people with their insurance that way. Of course, in any deal, you start to meet lenders, you start to meet property managers, you start to meet, individuals who are then getting into small rentals, who then, get into schedules of rentals, who then get into large multifamily assets, was where I ultimately got led to. So flash forward to 2020, it was April, the most ideal time that we've had in a long time to do a merger of companies and tell your employees that they're going to have new bosses or new logos and new businesses. But my company that I had built for Century 21 was acquired by a company named Obie. Obie was fresh out of YC, and they are what's considered an insuretech company that concentrates in the real estate space. And we joined them to add in the middle market and private client, which is private client does a lot of the large syndication. And with our premise of bringing technology, speed, accuracy, pricing, and really shaking up kind of the habitational market from one unit all the way up to thousands of units. So that's what I do currently. I sit over the insurance side of the house for that company, doing 1 to 4 instant product through our website, if you're in that space, all the way up to 200, 300 individual unit multifamily deals across the country. And we have a big team, and that's all we do.
So that's how we met, of course, because you do the insurance on our multifamily deals. And a lot of times we have investors, and it's a valid question, right? They say, okay, what if the inconceivable happens? An act of God, okay, like, or an act of a tenant burning macaroni in the microwave, you know? Like, what happens if the building catches fire? What happens if there's a hurricane? Are you guys covered? What do you do in those situations? And then we kind of bring up the aspect of risk management, the comprehensive insurance we get for our properties. Do you kind of want to dip into that a little bit about kind of the coverage that the insurance provides for the property?
Yeah, absolutely. So the interesting thing about insurance on the large multifamily assets is the coverages are really heavily dictated by the lender, by the arbor, Bancorp, whoever you're bringing on.
Because really they own the property, right? They're the largest shareholder in the asset.
Absolutely. So a lot, there was a time where I would run my own numbers and do a lot of different things. And it just got to the point where I realized who the quarterback was. I realized who the boss was. And it really is the arbor and Bancorp. They're running their own insurance replacements. They're having deductibles a certain way. They're making sure you have coverages. And overall, that's a really good thing. So that's why I bring it up, right? It's a pain because I work for the client who talks to me about nothing but price, price, price. Don't kill my NOI, right? But I have the real boss over here telling me, Matt, this is what you need to insure us for. So it is a mix, and it is the tightrope dance or whatever you want to call it that we handle is making sure we get great pricing or adequate pricing for our clients, but also, we have to meet these requirements. And overall, those requirements are really good. They make sure that you have those coverages for all those items that you mentioned. They make sure that, your deductibles aren't crazy out of whack where potentially you might not have the funds to cover that, particular claim from happening. And, just overall, they're not going to let you miss things like, flood insurance or ordinance in law or equipment breakdown, all these different coverages that, in my area of the world are just, that's just what we do. But, you can kind of rest assured on two things as it relates to insurance. If you have a good lender partner, you're probably getting good requirements, right? And accurate. And then if you choose to have a good partner or someone on your team that handles the insurance, that combination should make sure that you're covered. So you don't have those questions of, am I covered correctly? And then to kind of put the icing on the cake, what we realized is that, and I've gone through it from the investing side and seeing that side of the world myself, is there's a race to the finish line, right? It's raise the money, get it closed, and we might not always pay attention to everything going on. We do a phone call 2-3 weeks after close, or we offer a phone call. We hope most people jump on to talk about, hey, this is actually where you ended up with your insurance. Here's your deductible. Here's how it works if you have a claim. And here's some things that at this point, if you want to do to adjust your deductible or make some adjustments that you can, now that you're closed and you're breathing a little bit of a sigh of relief and all that type of thing. So we do put that in place as well, which helps.
I was just going to say, for our listeners, we have mostly passive investors. So they want to be reassured that when they're getting into an asset that everything is covered or that we can at least mitigate a lot of the risk. So what kind of coverage do you typically see that banks are requesting and that you're covering for each asset, whether it be, you kind of mentioned fire and equipment, but does it include, vacancies or loss of income? Does it include, what are all the things that you kind of would typically insure, and what are the details to that? Is there anything that you think passive investors could, feel a little bit more secure in their investment in multifamily?
Absolutely. So I will preface it I will give the answer like no one on this podcast knows anything about insurance. So that way I don't miss anybody, and I'm asking for forgiveness for those who are insurance experts potentially.
Well, and one, let me just hop in real quick and just say, Matt did talk about NOI. For our listeners, that stands for net operating income, and that is your gross revenue minus your expenses. And of course, that's a number that sponsor teams really consider whenever deciding to invest in a property. Yeah, continue.
Absolutely. Yes. So, the main three coverages that you're going to have that you'll hear is property coverage, general liability, and then some form of umbrella or also termed excess liability coverage. And the 30 seconds kind of on each, and then we can dive into more if you have some follow-up questions on it, is property coverage. That's probably what most people think about, right? That's the, if my place burnt down, if a tornado came through, if a hurricane came through, we flush the wrong thing down the toilet and it causes a major flood. And I should use the word flood, water damage. We'll go into flood next, but water damage, right? Those are probably what most of your investors are thinking about when they're like having that nightmare situation, which rolls into when that happens and I have that fire loss, am I covered? Yes, property will cover, to replace that fire damage or that water damage, right? And while you're doing it, yes, you're covered for your business income, i.e. your rents, right? So both of those are always covered. They're never missed. And they are dictated very heavily by the lender. So you can rest assured that if you do a deal, they're going to make sure that the building amounts that cover the fire and the rental income is taken care of, right? The part that sometimes, may or may not have coverage for is, whether you're in a flood zone or not. That's kind of the fourth policy you might see from time to time. Again, we're going to run flood maps and see if you're in a flood prone area, flood zone, and a lot of that again is working with the team to determine flood. And the easiest way to understand is the difference between water damage and flood. If water hits ground first, then comes into your space, it's flood, and you would need flood insurance. If it comes through or causes damage in any other way, comes through a roof, comes through a window, comes through the side of a building, comes up a toilet, out a shower, that is going to be under your property coverage. So that is the simplest way. First is if someone called me and said, I think I have flood damage, I say, did the water hit the ground first and then come in, or did it come from any other area, right? And then we can determine what policy, it would go under, and if you have, the correct coverage. Your second,
I've never heard it explained that way. That's really interesting.
I did a couple of years of catastrophe work for State Farm, where I was, Hurricane Katrina and different things like that. So going out and that was always the big one. We had to determine whether it was going to go through FEMA and it was going to be flood, or whether it was going to be, through your property coverage, or both. And sometimes, you couldn't tell the chicken or the egg. Did the rain come through or did it flood and then come through? It can get tricky, but for the most part, that's the easiest way to dictate. Your general liability, your next one, right? They're kind of the tandem, right? Your property and then your GL, right? Is what a lot of people will call it, your general liability. That's going to cover you for things that you are liable, right? And you really think of your property as the person, right? In this, it's not going to cover the syndicator or the investor for financial advice or anything like that. That's a different. This is going to be something happens on your property, right? That you're liable. Someone trips and falls. They're mowing the lawn and they shoot a rock in it. It knocks a kid's eye out, right? Your liability. What is your? It's almost kind of like a premises liability. You might have heard that term, right? What is your property liable for, right? Sometimes shootings that happen, could be something that you're liable for, right? That's a big one. Crime and and someone gets hurt. Those are things that you could be liable for. So two coverages that are always on, always taken care of. At least if I'm doing insurance, like we don't miss those two, and you can kind of rest assured. And then the last one, the excess or umbrella, that is just extra liability, because normally your general liability is $1 million in coverage. It's if you want more liability, because maybe that kid that got his eye knocked out, maybe that eye is worth more than just $1 million, or they're going to sue for more than $1 million. So you might want some excess liability that would kick in next, 5 million, 10 million, 15 million, to just give yourself more protection. And a lot of times, the premise of that extra liability is to protect your assets, right? So a lot of times, you're putting 10 million or 15 million in place, which is going to cover, if something happened to you, you're not going to lose your asset, right? This is what your investors are worried about, right? Because you're going to have enough coverage over here that they're not going to come touch your assets. It's going to go through that liability coverage and keep everything in place. And that's what insurance is for. So that's kind of the high level, of these different coverages. And the last thing is your deductible is usually mostly related to your property. So if, A lot of times the GL doesn't have a deductible, could in certain circumstances, but most of the time when you hear deductible or something you're going to contribute as the owner, or it's going to be money contributed out of the fund that affects investors, the deductible, that's going to come on your property side.
Gotcha.
That's great information. I feel like that would probably just add so much value to our passive investors to know the ins and outs of the coverage.
I mean, it makes sense because when you finance a car, right, they require that you have comprehensive liability coverage and not just the basic state level liability coverage. So
even just for a single family home, like we cover, you know, our asset, and then we have umbrella on top of it, and whatever is inside the home, you also get insurance for that. So it's like an end-to-end type thing.
Yeah, the lender requires it, and they also require reserves as well in the case of catastrophe or damage. So I think what I'm hearing is our passive investors can sleep well at night knowing that we are covered, not only because we want to be, but also because we are required to be.
Yeah. So I'm curious, what is the craziest insurance claim story you can tell us?
Craziest one. I think the craziest one for me was because it was one of my first, and I had no clue what I was doing. I was a cat rep, and I don't know, 21 years old or 22 years old, and we had a giant like redwood tree that just went right through someone's house, and to see the destruction and everything like that. And what made it crazy is that usually goes to a pretty experienced rep. So I got signed incorrectly because it was like my second claim. So I spent about 3 days out there having no clue what to do. But I also was so young that I didn't have the leadership courage to call my boss and be like, hey, I don't know what to do. So it was very interesting, I'll tell you that, and to see what's going on. And really the eye-opening part of doing catastrophe and why I did it was it's so easy when we're sitting on these deals to talk insurance and say we want price down lower or we don't need that coverage. You know, when you really do see one of these large losses or these big impacted, that's when really insurance kind of comes to life. There's the saying, we don't care about insurance until we need to care about insurance. And so that's really, I think, the crazy story, but the message behind it is just, I've seen where that could have been absolutely devastating for that family of, I think they had 7, it was 5 kids. That could have been devastating if they didn't have the right coverage. They could have used a better claims adjuster, which we got them very fast after I kind of bowed out nicely. But, overall, that's when you really see the impact. A small little $20,000 loss is not devastating, but, a major hurricane or tornado can really be devastating. That's when you want that insurance in place, because insurance, it'll be uncomfortable, it'll be a pain in the butt to go through a large claim, but what you don't want it to be is a devastation, to your investors, to yourself, to the people affected. And insurance fills that gap, whether we like it or not. It's important in our most important moment, right? And that's the key. But all insurance claims are crazy. Just side note too, they're always
Okay.
fun.
So I'll share a crazy insurance
that you
Well, yeah. Okay. To me, it was super crazy and a little funny, but it affected my property. So we have a rental in Austin.
Okay.
And I got a picture from our renter with a car that had crashed into the house. Including the window and the side of the house, okay? And I was like, what happened? So he's like, I'm gonna go out and figure out, what happened. The police are on their way. I'm like, oh my gosh, I really hope that everyone's okay. He's like, yeah, everyone is fine. Turns out that the guy was delivering a DoorDash meal. Forgot to put his car in park.
No.
Forgot to put his car in park. The car literally drove. So he's stepping out, gonna deliver the DoorDash. the car started driving itself and then drives itself into our house. So
That is
super crazy story.
crazier than mine.
But I will. What's that?
I said that's crazier than mine, but you know what? From doing it since I was like 13 years old, I forget about these stories until people bring up because I know about probably too many 10 plus of car into house, and I've seen car into house where it is a 9-year-old and his sister driving the car, and they like stole their parents' car and drove in a house. I've seen where someone stole a car and then crashed into a house and then got arrested. I mean, I think more than anything, it's maybe not the best example of a crazy story because my mind just wasn't jogging. But you bringing that up makes me realize actually how many probably crazy stories that they're just like vanilla to me at this point from doing it. But those stories are every day.
Yeah, the other part of it was that this guy was able to get back into his car and drive away to go on his merry way to deliver more meals. Like, he was totally fine. His car was still drivable, and our house was left with, an insurance claim, and we had to get a new window and fix all the brick, and I mean, it turned out fine, but yeah. So,
that is literally insane.
Yeah.
Matt, I know you're in Florida, and I was talking to someone from Florida, and they said cars driving into like buildings and driving into houses is a huge concern in Florida because like there's such an older demographic of people there that have licenses that maybe shouldn't.
Oh, wow.
Yes.
Okay.
And this is why I left the home and auto part of the insurance and hang out with the more professional multifamily group of individuals.
Yeah, definitely. It's a different bunch for sure. That's awesome. There was something specifically that we wanted to ask you about. It was the, you mentioned it.
Insuretech?
Yeah, the insuretech. Is that what it's called?
Insuretech. Yes.
Insuretech. Yes. Tell us about that.
Absolutely. So potentially your viewers have heard of companies due to, the stock market, like a Lemonade or a Hippo, that Metro Mile, some of these that have went IPO lately. But insuretech is just a fancy word for almost like what Expedia was for airlines, just taking kind of some of the processes or some of the ways that a certain industry, most likely, just like ours, a very older, I will say, industry that hasn't had much change, and bringing some technology to it, right? Seeing some areas of how technology can solve, whether it's pricing, whether it's speed to getting a policy, whether it is handling claims faster, like we just talked about, across the board. So there was these first few carriers, like a Lemonade and Hippo, and they concentrated on the home side of or the renter side of insurance, and some concentrated on the auto, basically direct to consumer, eventually agents, but getting policies in hand quicker. So we are part of that community. We are in kind of what I call the insuretech 2.0. So we're, those were our forefathers. We are like the next generation of insuretech. And what we specialize on our one side of our house is the 1 to 4 rental dwelling product. So you own a single family rental, or you own a 2-flat and you rent it out and you're the landlord, you need insurance for that. You can get that from us at midnight, 2 a.m, whenever you want. You can do it completely through our website. It's our own product, and which helps just the overall message of anybody I think under 50 wants everything yesterday. So we're just kind of rolling with that in the insurance space. Unfortunately, I can't have that available for the larger multifamily as much as I would like, but we're gonna try. But right now it's a 1 to 4, and we sit in that insuretech space. We actually just came out yesterday. We just got ranked actually 6 something in the Inc. 5000 for that side of our business, which is really cool. So it's fast growing. We work with a lot of big partners in the prop tech space, like like Fundrise, Nest Egg, Long Home. These prop tech companies, right? We kind of brother, sister, or whatever you want to call it, or sister related, or whatever the relationship is, but where they're trying to provide property management or help with rentals in a faster way, and then we combine with the insurance. So that's kind of our go to market with a lot of that side, and It's exciting. It was something that I got to be involved in as a lifelong insurance nerd, as I mentioned, where could kind of see what it's like to be in more of a tech forward, I call it Silicon Valley type company, but also we still haven't abandoned the middle market and private client, which is my main go-to.
I saw that you posted on Facebook. That is so exciting. Congratulations on that incredible achievement as well. That's amazing.
Thank you.
And also, just for our listeners, when he says 1 to 4, he's talking about 1 to 4 units. That is considered residential. And then over 5 is considered commercial real estate. So when he's talking about 1 to 4, that's all of you people out there that own single family, duplex, triplex, quadplexes can take advantage of this awesome program. That's fantastic.
And people can reach you at obie risk.com/agent. Is that correct?
You know what? For this group, let's go obrisk.com/private-client, because that will fit everybody, I think, listening here. That will get them directly to me and my team, especially if we have passive investors or people working on the larger multifamily. I think that'll be a good fit for them. And, also there's, I think I'm the only Matt Sutika, kind of like, Tigger or whatever. So any social media, you can find me under my name and send me a message there if you need some help.
And he has the cutest little baby boy named Penn, and he's perfect.
I so appreciate that. I've tried to, since he was born, mention him on every podcast. And my wife actually makes fun of me because she's like, sometimes the hosts just like that, they say something. She's like, but then she's like, you'll get to the end and you haven't been able to bring up your kid. And they'll be like, well, hey, I hope you enjoy the weather. And you'll be like, yeah, and I have an 11-month-old and his name is Penn and I love it, right? So I appreciate you getting that out without having to.
Literally, guys, add Matt on Facebook just to get Penn spam. He's so cute. He's so perfect.
Okay,
and I feel like
it's going now.
Definitely do. It's worth it. And then I feel like as insurance reps go, you are not an energy vampire. I think
appreciate that.
I think a lot of insurance agents out there are such energy vampires. I've never heard of that. They just suck the life from you.
I appreciate that a lot. As I mentioned in the very first thing, I try to, insurance is what we do, and I love it. It's a great career, and I'm really happy at it. But I do love the entrepreneur side of it, and I do try to pride myself in, yes, I know everything about insurance. I'll get it done, but I hope you actually want to have me as a partner in your team. I hope you actually want to see my kid on Facebook. I hope you want to actually, if we're at an event, actually have dinner with me or have a drink or whatever, and not just be I gotta call the insurance guy. It's gonna be the worst 10 minutes of my week. So I do appreciate that, and I try really hard to do that. I think the only people that have it harder is maybe what's it? Is it mortician? That one's a tough one, right?
Yeah.
Actually, I do have one more question. Sorry.
Did that just trigger it?
I know. Okay. Have you seen an uptick in pricing for insurance because of COVID and the cost of labor maybe at your company? Has there been any increase that you've seen in insurance costs?
Everybody that's on here that knows me is saying yes, we've seen yes, we've seen major increases to the insurance, especially in a lot of states. But it really goes along with everything else that's going on. We've been in a bear market in the stock market. We've been in a bear market and we're looking at inflation. I mean, everything has. So yeah, I think COVID has to do with it a little bit. I think the world has something to do with it, right? I think most of the carriers are definitely not wanting to sharpen their pencils right now because everyone's in such uncertainty, and that's hitting across the board. You're seeing it with lending, the rates going up. I mean, it's just that in general. But yeah, right now, especially if you're Texas, Florida, Southeast, coastal, the carriers aren't being as nice as they were back in 2019, and early 2020 with their rates, but it'll get better, right? It's all goes in a circle or a pattern over 3 to 5 years where we'll get some good years. We're going to have some tough years, and it'll get there. But again, if you're looking at a property for 3 years, 5 years, 7 years, you can equate for that. So unfortunately, if you buy today, you're in maybe the bear market or your more expensive time, but you should get some good years through there, and just like everything else, you can project that out.
Yeah,
fantastic.
And we definitely run insurance quotes before deciding if moving forward on a property. So these increase in costs are definitely going into consideration. We're not going to be like blindsided by them after close, right?
Yeah.
So
yeah, I was curious because I saw a bigger uptick on my single family and my rentals. So I was wondering if that was affecting multifamily as well. But it sounds just like inflation probably has a lot to do with it as well, where everything is just more expensive.
Yeah.
But hopefully with a better economy coming soon,
coming soon to a town near you.
Things, like you said, things will equalize at some point soon.
Yeah, it's what
we can all hope.
Yeah, it's what we're doing. And really, one, we do have a dedicated team that does nothing but what I call LOI estimates. So anybody watching this, if you're looking at something, you can hit us up. We'll get you something accurate as we can at the LOI estimate. But really, if someone wanted my opinion, and I know about this much about syndication and real estate, I'm learning, but is if prices are going up and also the real estate market is getting higher, you can use those pricing to potentially help you, negotiate a deal. Now, that wasn't that way over the last year or so. Everybody was like dying to get in, but as things are going up here, I would assume the real estate market, it's not as much it's going to be a seller's market, and you're going to start to get in a little bit more negotiation, maybe even flip to the buyer side over time. So, as much as some of these things are going up, it might allow you to get some better deals or, not have to overbid. So, hopefully you'll get some relief one direction or the other, here shortly. And, I think real estate is still great. If you can find the right property for long term, it's what I'm focusing a lot of my personal investing on. And I think insurance in the long haul will be good over, the next couple years going into 2023.
Yeah, I mean, it's a non-negotiable.
Yeah.
Well, Matt, thank you so much for joining us.
Thank you so much.
You brought so much value to us.
And we can sleep better at night.
Yeah, totally. And I'm sure our listeners as well. So we appreciate you guys. If you want to get in touch with Matt, I will link that URL in the description so that you guys can reach out to him. Thank you so much.
And say hi to Penn for us.
Yes, say hi to Penn.
Absolutely. I will do that right after we hit end on the record.
Awesome.
Okay.
Thanks, Matt.
Thank you.
Andrea, that was freaking awesome.
That was so good. So much good information.
Yeah, really cool. Actually, stuff that I didn't know because, that's why you hire an insurance rep is to take care of the stuff that you don't know about, right?
Absolutely.
So it was really informative for me even as an active syndicator in this space.
Yeah. We're really well covered. That's basically the moral of the story. We're covered because the lender requires it, and the lender is going to own 65 to 70% of the property. So they're going to make sure that their investment's covered as well. Exactly.
Well, without further ado, you guys can find us on our meetup group if you're interested in joining us for in-person meetups in DFW or potentially a virtual one in the future we talked about a little bit.
Yeah, and sign up for our email updates where we have educational emails. Also, sign up for a consultation with us.
Yes.
We want to talk to you if you think that you're ready to invest. It sounds interesting. And go through our little quiz and survey. You'll be able to download our ebook, do all the things, and you can do that at goodgoodinvesting.com.
Yes, you can find all this info on goodgoodinvesting.com as well as resources. The consultation or the investor discovery call is absolutely no obligation. It just opens you up to the opportunity to start receiving deals if you in the future are interested in pursuing a multifamily investment.
That's right.
That's it, guys. Well, we'll see you next week on Good Good Investing. Hey, Andrea, don't invest good.
Invest twice as good.
Bye.